Hey everybody, Ryan Schramm. I hope you're having an awesome March. Hey, I wanted to come to you guys with a quick market update on what I'm seeing. This is kind of like finger right on the pulse or on the forefront. As you probably have seen, interest rates are climbing. Right now, the national interest rate average is like 3.1%, so low threes. Incredible rate, lower than most interest rates have ever been. However, this is playing a significant role in what we're seeing take place in the market today. Why? Because our market is scalding hot. It's been red hot, but it's also sort of built upon this low interest rate as well as supply and demand. But this low interest rate has been allowing buyers to kind of bid to the next price seemingly every time a new house gets listed. So if you're a buyer who's out there shopping, you're feeling like, man, this house a month ago was $1 million, and now, January it was $1 million, February, March. Now we feel like we have to offer $1,050,000 to even be in the running to get this house. And that was because interest rates were just lower and lower, staying lower and kind of bottoming out. Now interest rates are clearly on the rise, and that 0.5% from when the average was 2.5 up to 3.1 plays a significant factor in how much a buyer's monthly payment is. So this is something to watch. Right now, it hasn't really dramatically affected anything. However, this is something to watch, because what it could do, and this might not be such a bad thing, is just kind of slow that almost not sustainable price war and an upward pressure of home prices. And something else that's really, really interesting to note, and I'm going to be watching this week, is I was reading about how Freddie and Fannie, the government-backed mortgages that purchase mortgages on the secondary market, they're going to significantly decrease the second home mortgages and the residential income property mortgages that they purchase. So imagine now that the government is not buying these loans to kind of stifle demand for those types of properties. It's going to be very, very interesting to see what happens to second homes and residential income properties. Fannie and Freddie are still going to be buying the primary residence owner-occupied mortgages, but this is something that's developing, and I wanted to keep you guys in the loop on it. The takeaway from this all is I don't think the market's going to crash. And rising interest rates could be a good thing. I mean, if you're a buyer watching this, you know how difficult it's been to get an offer accepted. It's been crazy. Sellers have been benefiting from this, but rising rates might not be such a bad thing. If you are a seller, right now is the best guaranteed time that I could offer you to list your property. Things might look different come this fall. And I know it's early spring, but you know how quickly time moves. Fall is around the corner. If you're a buyer watching this, I think even if rates do rise, it's going to affect your payment. It's not going to bring prices down. It might just create a little less competition. So it's still at your advantage to try and lock up a rate now before rates get 3.5%, 4% by the end of the year. So I will keep you posted. I'm going to do a quick market update sooner than I normally do because of this news, and I'll keep you guys posted. Take care. Have a great week.